Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen, and it's been crazy. It's just like the news never ends or something, which I think might be the case. There's no shortage of stories coming in these days, guys, and we're going to do our best to cover it as much as we humanly can, and as this article out of CNBC says, California housing seen cooling further going into 2020, UCLA forecast. And let me just add, I'm no fan of the UCLA, the University of California, Los Angeles, Berkeley, any of those. They're not good sources of information, but we are going to go into some of this information, the stats they provide, and then break it down better for all of you to understand, as this is a major issue that's affecting so many people today, is the housing market, as we've seen California get propped up and up and up and up. And we've seen the inevitable fall, which we spoke about years ago here at WAM, and people called us crazy. Nothing new there under the sun. But anyway, let's check this out. As the article goes into, while job growth and the California economy remain strong, weakness is apparent in the state's housing market, and it is likely to cool further going into 2020, according to the latest UCLA Anderson forecast released Wednesday. And I quote, "The housing markets are softening in California, and it's not just the Tony neighborhoods of San Francisco, Silicon Valley, and West LA," said Jerry Nickelsburg, an adjunct professor at UCLA and director of the Anderson School of Management's forecast. "This is a statewide phenomenon." The economist said anticipated demand for housing throughout the state has been lacking despite the strength of the state's overall economy and positive trends in the job market. That's pretty funny. That's hilarious. Anyway, going on, Nickelsburg said the slowdown in the state's housing market also has implications for the California economy going forward. In addition, the housing slowdown could put a damper on Democratic Governor Gavin Newsom's plan to step up the pace of new homes built to help ease the state's housing shortage. And I quote, "With our national forecast for slowing economic growth, continued discussion on when the next recession will be, and the Fed indicating that the peak of the interest rate cycle could be near, we now expect weaker housing markets into 2020, Nickelsburg wrote in the forecast report. As a consequence, our forecast for housing starts in 2019 and 2020 has been revised downward, with a recovery in building beginning in 2021. While the housing market is slowing, the state's job growth remains strong, according to the forecast. It said California's average unemployment rate is expected to rise to an average of 4.5% in 2019, with slower national economic growth, and then at a pace of 4.3% in 2020 and 2021. California added the highest number of construction jobs nationally between January 2018 and 2019, according to the Associated General Contractors of America. The state added 28,500 jobs, or an increase of 3.4% during the period. Meantime, Nickelsburg said home prices are falling in many major markets of the Golden State, calling the decline widespread and substantial. The economist said the impact of the cooling is even being felt in the Central Valley of California, where home sales have fallen by more than 10%. The Southern California and San Francisco Bay Area home sales fell to an 11-year low in January, according to CoreLogic. The analytics provider reported sales have fallen on a year-over-year basis in the Bay Area the past 8 consecutive months, while in Southern California, sales have fallen on a year-over-year basis in the last 6 consecutive months. At the same time, the nation's most populous state continues to suffer from a chronic housing shortage, and I quote, "Home prices are falling in California, as is the level of building," Nickelsburg wrote. He said one possible explanation is higher mortgage interest rates are depressing prices, but not the underlying demand. Another possibility behind the housing slowdown is prices are so expensive that everyone, well, a lot of everyone, is leaving, the economist added. Newsom, who assumed the governorship in January, this week announced an updated plan to ease the state's housing cost crisis. The Democrat proposed a $1.75 billion housing package, including $1 billion in loans and tax incentives to spur low, mixed, and middle income housing production. The government wants to build 3.5 million new housing units in the state by 2025, or an average of about 500,000 a year. But there were only about 120,000 new homes built in 2018. Newsom is pressing cities and counties to meet those ambitious housing expansion targets. Some of the steps are controversial, such as threatening to take away transportation funds from cities that fail to meet targets. So I do want to add here that we are seeing very similar acts that we've seen in places like China. They're talking about like almost tripling the amount of houses that they want to build in a year. This massive amount of loan, one loan after another, these tax incentives, all this kind of stuff that adds up to more market manipulation, which led to the bubble in the first place, which we saw with in the case of, he mentioned, they built all these homes and they have this expectation for homes to be bought, and we are getting all these construction jobs in. All these people are getting jobs in construction, and of course a bunch of jobs in government as well to prop up the number, as many are hidden also in the labor force participation rate numbers. But nonetheless, it's clear that they are trying to prop up that system and centralize that system, and that is one of the things that caused the problem in the first place. Problem, reaction, solution, repeat forever. John, what do you think about this story?
Well, this is just more of the same from all around the place in the United States. There's, of course, different markets that are doing worse than others. It's funny how some of the highest taxed markets are also some of the highest indebted ones and the highest priced markets as well. So that just shows you how government intervention is really destroying the market and making it a way, very, very unaffordable in those markets. And of course, in California, you have the major markets that are like beyond a substantial amount what the actual housing prices are. For example, San Francisco, and this is numbers from early 2018, you had the median house price was as high as 1.62 million US dollars. That is quite insane and substantial number when you look at places like Vancouver isn't even close to that, for example. So that shows you one of the markets that are just beyond a bubble. Like they doubled the house prices since 2011, which is also insane that the housing market actually doubles in price on an average. That just shows you how much out of whack it is as well. And then if you go to the average of California in general, they're actually not even above the peak on May 7th in 2007, what really triggered a first property bubble. Because we got to remember, Josh, as well as, we got certain bubbles in the United States like this, like California, and so on. There's a couple of markets there that are really bad, but most of the markets there are not doing so well as well. So we got to remember that this is just certain symptoms of stupid policies from the government, and of course trying to prop up with lending and so on, forcing people into houses that are that they never will be able to pay back.
Yeah, well, John, I mean, a great example of this is, for example, the article mentioned that it's the most populous state, and then you look at other states like New York as well, and you notice the most populated states tend to also be some of the most centralized states and carry so much of the country's debt. And then those states are also seeing vast exoduses. We are seeing countless people leave California for places like Nevada and Arizona, and we're seeing a lot of people flee New York, a lot of people flee New Jersey, and we're seeing all these things come together at the same time as they're saying it's a new bull market for the stock market. A lot of speculation, a lot of nonsense, which we know well, we've seen a million times before. And just on that note, we saw back in 2007 this vast amount of collateralized debt obligations, mortgage-backed securities, subprime lending, credit default swaps. We're seeing so much of what we saw before, plus an even more bankrupt banking system according to the cash to deposit ratio. So how unsustainable is this going forward?
Well, it's very, very unsustainable. It's not going to work. I just been recently, the last couple of weeks now, tried to focus on, getting some meat on the bone on my book. And I've been writing, over 20,000 words, which is bigger than the last book, the first book that I did, which has 300 something pages. So, and that's just the first chapter of it. I haven't even gotten past monetary history. But what monetary history shows us is that the constant, printing of money, no matter how you try to twist it or say that it's better now, it's not going to work, guys. These Keynesian idiots that are running the system, they very well known, if they had a little bit of a history book, even just like American history from the 1776, when they had the Continental that they printed into oblivion to fund a war. Of course, that's how you do it. You gotta fund the empire, and even though that they were fighting an empire, they still had their own like war, and they printed money and destroyed wealth by printing that money, and that's what they're doing currently in the United States now. The thing is with the United States, what you're seeing is they are not even on the scale with their housing market as places like Norway, Australia, and we got, of course, Canada, the major markets there.
UK is not doing so well either.
Yeah, and UK, of course, we can't forget to talk about UK. But what we gotta see here is that it's just so much money printing. What we gotta remember with those markets was that they didn't get really hit hard in 2008. They just like slowly rebound. The United States actually got hit really, really hard in their housing market in California, if you look at the chart there on the median. But as you can see, like this is an interesting trend on the like before and after here, where you see like a blatant manipulation of almost all markets, where you see a huge trend. You know how the housing prices just trend up and trend up and trend up every year at the same dates, and they have been pushing, of course. You had the dot-com bubble, really, San Francisco and Silicon Valley there. It just blew through the waters, like the housing prices and affordability there. People, we covered before that people sleep in cars. People had to be 4 people with full salaries in a dorm in order to be able to afford to stay somewhere. So it's clearly that it's completely unsustainable what they're doing.
Well, there's a lot of people in San Francisco that have 2 jobs that are living out of their cars. I mean, it's so brutal. And I do want to quickly mention just how insanely enormous the inflation affects us, as you've gone into, John, which is the fact that we keep hearing all these government officials, people like AOC out of New York, and many politicians out of California and all over across the board, talking about, wealth inequality and wages. Wages are not going up enough. And it has nothing to do with that. That's not why people are impoverished. It's because of the price of living constantly inflating and government centralizing and propping up everything, causing major domino effects over and over again. This is basic economics. So, John, I wanted to ask, going forward, how this is going to affect people long term, because this cannot sustain itself much longer.
No, of course it can't, Josh. It definitely can't sustain itself forever. And that's always been the belief when you have bubbles like this, when you have people that are not just caring, it's usually politicians throughout history, like recent history. You've been reading about, I've been writing about the French Revolution, what caused that. That was political, kind of similar political disarray as we have now. And it's always that. It's always these politicians that are thinking very, very short term with their government, ideas. And usually it's a massive deficit spending by the government that happens, like it happens with the French Revolution. It happened with the Continental. There was a huge, substantial deficit of the government just printing blatant, borrowing money out of thin air that they didn't have, of course. And they tried to, raise taxes, but that didn't work. And very suddenly, that money that they're using, you're seeing that it's rapidly starting to lose value. And you'll hit that point where it's starting to lose its value further and further. But when it actually really breaks, Josh, is when people wake up to the reality that all that money that they saved up in the US dollars, in Canadian dollars, whatever currency it is, that they trusted their life to store value, becomes very devalued compared to what they thought it was worth, that their investments was worth in a crash. in a massive deflation. When you have all this debt that has become completely unsustainable and it just collapses in on itself. Nobody could pay down their debt, right? But of course, Ben Bernanke has reassured us that they were even on 60 Minutes just recently. It was Yellen, Bernanke, and who was Powell. Yeah, they were
actually,
on there.
By the way, I got a video going up on fact-checking Powell on that show right away too.
Yeah,
so make sure to stay
the
tuned.
thing is, like, who did they not bring there? It was, Alan Greenspan, the guy that actually created all of this, that are talking against it now. Of course, he wasn't on the show. He was instrumental in putting forward those ideas that the current, even Powell is using. And they're so oblivious to the actual history of things and how, they believe that they could print this money forever.
Well, Greenspan is truly evil in my opinion because he understands this stuff and he's understood for years. Ron Paul and the Fed goes very much into the fact that Greenspan back in the 60s and 70s was talking about gold as wealth insurance and against things like fiat money. Anyway, it's so ridiculous. Paul Volcker too. I didn't see him. It's really important that we understand that the government isn't going to solve these problems. The Fed isn't going to solve these problems, and it needs to come down sooner than later. The more it's propped up, the worse it's going to be when it comes down. So we have to kind of hope for this tragedy to happen sooner than later. But John, I wanted to ask you also before we close it off, this idea that Gavin Newsom has of pushing forward this agenda to build all these houses, like that's going to somehow solve this crazy problem. Like, it's to help the homeless that are in debt and impoverished because we propped up this system and inflated the price of living dramatically, and we're stealing half of everyone's money and regulating everyone to death, pushing small businesses out of the market. But I know what'll help: building more houses at taxpayers' expense. What do you think?
No, the problem here is the inflation, and the inflation is usually heavy in cities. You pay a lot more for things in cities because there's way more supply of money within city limits usually than it is on the countryside, for example. There's way less supply of money chasing the assets and things that you can buy and supply, of course. So you would see, like, I believe, like, we're gonna see the cities are really gonna start to struggle big time. You did a report recently on New York, how they're about to face bankruptcy, in the very near future because of these ideas that you could just print money out of thin air. And that is stopping. Like, this is an idea that is falling apart, and now you have they're just doubling down. You have these crazy people, modern monetary theory, like you have AOC and others pushing this agenda that way. Let's just print more money. It's totally fine to just print money. No, the history books are telling us that you guys are idiots. You haven't studied history. You are repeating the mistakes that have been done for centuries upon centuries upon centuries by politicians and people like you that had short-term thinking. They didn't study the world. They were just brainwashed. Actually, they're brainwashed, most of them, politicians that are out there. Yeah, well, I think most of them are just brainwashed idiots that are running around thinking that they know something that they learned, but they learned it from a system that's corrupted in the first place and are used to brainwash them, right? So it's again, you're having people, you have created people that believe in a belief system that is completely flawed, and of course they have no fact checking of history to actually see if their ideas actually have some stronghold in them.
Yeah, and then there's those of them that are just, they have an agenda. Their idea is to push people into further dependence and control them further, because of course there are many out there that realize that, hey, if everyone's in debt, then they are dependent on us. They're subservient to us. We can control them more easily. If they're on their knees begging for help, it'll be so easy. And that's a huge issue too. And before I go into all the solutions, because there are more solutions than there are problems in the end, folks, and it comes down to the individual, I want to also mention we at YouTube have been dramatically shadow banned lately to an extent that's absolutely crippling. We're talking 4 videos a day and still getting less than we usually get in a day in viewership from one video, and our subscribers are ticking down, and every person that subscribes to us, another person gets unsubscribed automatically. It is getting really, really bad. We check it every morning, 7 to 10 a.m. about. We see the subscriptions freeze at a rather good rate, and then they just start dropping after that, or they freeze solid. And anyone new that subscribes, they just unsubscribe other people. They're unliking people's video. They're not being notified for the most part. They're not showing us in the side panel. It is really, really bad. And we're not the only ones dealing with this right now. So we need you guys to help us. We need you guys to share the videos. We need you guys to press like on it. We need you guys to help us in any way you can, because independent media is crucial for breaking down this brick wall of misinformation and propaganda that we get from the mainstream media on a regular basis. Whether it's donating to us, sharing our work, telling people about it, just finding a way to get our message out, because YouTube is not allowing us to reach people right now, and it is destroying us.
Yeah, hey Josh, we just got to stop pushing all these conspiracy theories about money and economics that we believe in, because they're flawed, Josh. That's why we are wrong here. Like history doesn't really matter. Like who cares about history? It's what is current today that really matters, Josh. What mainstream media is telling us. So we got to just stop talking about these things, because it's completely wrong. We just don't even worry about what happened in history, because we are so right today, of course.
Yeah, they want us dependent and slaves, and they're censoring all the information. If you search things, most of the time, all you'll find is mainstream news videos all down the search page, despite our videos on those same subjects getting, in some cases, 100 times more views. It doesn't matter. They will just show CNN, Fox News, CNBC, MSNBC, ABC, BBC.
Don't worry, you can trust them, Josh. Come on.
But it's really, really brutal, folks, so we need your help, and that also includes, we have a Subscribe page. Subscribe is a Patreon alternative, and we are going to be doing videos, not safe for YouTube, on that platform as well, for only people to see if they subscribe. It's $4.99 a month. We have to do it. It's the only way we can survive as a media, because it's not even about the monetization. I don't even care if they demonetize us. It's the fact that when they demonetize us, it stops us from being seen. It cuts us from being seen because we're considered controversial content and no one sees us after that. It's really bad, folks, so we need to press this forward as much as we can. We're on many different alternatives, and you can see a whole bunch of stuff below, pinned to the top of the comments and in the description. But anyway, closing it off, I do want to mention all the solutions for this very real issue of this everything bubble worldwide, the monetary crises, the market crises. We need to talk about this, and it's the fact that individuals need to be self-sustainable, financially responsible, as responsibility is the hallmark of freedom itself. Food, water, shelter, self-defense, so you're not gathering things for the toughest guy on the block, and of course gold and silver as wealth insurance, not investments, but wealth insurance. This is my opinion, not advice. But wealth insurance is incredibly important to protect you, protect your purchasing power against dollar crashes, etc., which are all inevitable. We just can't put a date on it, because all fiat currencies have eventually reverted to their true value of zero. And also decentralized, properly fundamentally useful cryptocurrencies and blockchain infrastructure technology that we can actually utilize to replace so much of this system. Very important. I think great times down the road on the horizon. We're in a bear market right now, but so be it. That's when all the best ideas come out. So there are great things being innovated on the market to create alternatives for all these problems that we have. But right now, we're still in the mix of all these problems, and we need to be educated and get out as strong as we can and as well protected as we can. And information allows us to prepare ourselves and our family for what's coming at us. John, what's your bottom line?
Well, the bottom line here is we should just look at history. Let's pick up a history book and actually read about what happened in the past and how we exactly are doing the same exact things over and over and over again. It was funny. I was reading about the Continental and how Washington put in price fixing on merchants, because they blamed the merchants for raising prices. Meanwhile, they were printing all the money, so they had to raise the prices. It's the same that happened just in Venezuela, right? Like the same idea, but it's now it's like 300 years, 250 something years later, right? And you're doing the same exact things, and you believe that you're gonna have a different outcome. It's like, come on. So again, guys, we gotta try to get a little bit of a grasp of what's happened in the past, so we can actually very well tell the politicians and all these people that are thinking just in the current what actually will be the outcome of their policies. Because if we don't do that, if we don't understand the past, we can't protect ourselves in the now. And that is so important, and we need to use the tools, as Josh was just going through the solutions, to protect ourselves from the inevitable failure of the monetary system, because the current system that we have today is unsustainable. They can't print money forever. You will have that breaking point where we'll just go into oblivion and become worthless. There's just no way out of that system. It's never happened in history that you had a system that didn't do that didn't break or and go into a massive inflation or just getting replaced with another currency. There's no way out of it. Just realize that and just prepare yourself. Be protected, right?
Absolutely. So for everyone watching, make sure to rule yourself, decentralize everything, stop being a slave, don't be dependent, be responsible, and of course, hit the like button, hit the notification bell. Hopefully it works. We don't know. We're only, in some cases, reaching about 1% of our audience at the most per video. So we don't know what's going to happen next, but we'll never give up, and we will continuously bring you this information as long as we are on this earth to do so. So anyway, thanks for going into this with us, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
be the change.
Like what you see here, Wham? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube, as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.